Welcome to Bonnie's Beat. I'm your host, Bonnie Squires, and we're coming to you from Radnor Studio 21 in beautiful downtown Wayne. And we'd like to keep you abreast of what's happening in the academic world, in the charitable world, in the cultural world, and sometimes even in the world of money and money management. And we've got somebody here today. He talks a different language, but I'm going to get him to translate for me. His name is Pat Walsh, and he runs the Walsh Group at Merrill Lynch, which is now part of Bank of America, and he's really smart. You hear him on KYW radio every day. Pat, thank you so much for coming.
Bonnie, it's good to be with you.
It's a pleasure to have you in the studio. And one of these days I'm going to figure out what the words mean that you tell me when you advise me, right?
No, I think you do just fine, Bonnie. But it's great to be here in Wayne. I live here in Radnor, so I know my way around the neighborhoods, and it's good to be with you.
A homeboy, okay.
Absolutely.
Now, nobody, when he's a little boy, when everybody else wants to be a fireman and a policeman or a professional baseball player, nobody says, I'm going to be a wealth management advisor. How did you get the bug? Where did that come from?
It started rather early, believe me. I used to have a paper route. I used to deliver the evening bulletin every day.
A blessed memory.
And I remember I used to make about $20 a week, and I would
That was a lot of money for a little kid.
I think so, and got me my spending money, but also I saved some of my money, and I thought, what should I do with it? I'm not just going to put it in the bank. Let me buy some stock. So,
how old were you when you thought you wanted to buy some stock?
I was about 12, 13 years old.
How did you know about stocks?
Well,
or equities, as we say in the technical terms.
Yes, that's the new word, absolutely. Well, my father used to have an account with Merrill Lynch. His broker was Don Sabia, and I spoke to Don, and I asked him for some recommendations. So we did a little bit of research, and I bought a couple stocks. One of them was a local company, Amatec, and I always had an interest in the stock market. When I went to Bishop Eustace in high school, my favorite course was economics. And when I went to Drexel, studied finance. And at Drexel, I'm sure you know, they have the co-op programs.
Yes.
And I used to co-op at securities firms. So I worked at an old line firm called Elkin, Stroud and Suplee, which doesn't exist anymore.
Oh, it
was bought by Prudential Bache. And I used to work for a wonderful man, Frank Weckerman. And then when I was a senior, I absolutely wanted to work for Merrill Lynch, so I took a job from 5 in the morning to 9 in the morning, breaking down local bills. And I don't know if you remember
what does that mean, breaking down local bills?
We would send out confirmations to clients, and we would have to keep a record at the office and a record for the compliance manager. So at 5 in the morning, I would come in and separate them and put them in the appropriate place. And you might remember when you were a senior in college, sometimes you'd be staying out a little bit late. So it was a little bit, tough.
I didn't. I was married in my junior year.
Okay, well, for me,
I was very, very traditional.
For me, if you're out a little bit late, 12:1, getting up at 4:30 to do this job was a little bit tough. But sure enough, interviewed at Merrill Lynch. This is back in 1979, and was lucky enough to get hired. And been there ever since, 33 years.
33 years?
Yes.
In today's economy, that's miraculous that someone's been in the same company for 33 years, that the company still exists even.
Yes, of course, we do have an owner now, you may have heard, as you mentioned in your introduction, Bank of America. But no, it's been a great relationship. You know, they've been...
Doesn't seem to have changed anything, though, for you, has it?
In what respect?
In any respect, like who you report to, or
no,
how you function, what you do on a daily basis?
No, basically back in 2008, in the financial crisis, Merrill Lynch became vulnerable to some extent because of some of the mortgage-backed securities, and Bank of America saw an opportunity to acquire a great company, and they did that.
They moved in very fast.
Yes, I mean it was just a wild weekend. I mean, it was certainly from a business perspective the wildest weekend that I had by a long shot, because you might remember Lehman Brothers went bankrupt that same weekend.
Lehman Brothers, of blessed memory, also.
That was a disaster, and the long knives were out for Merrill Lynch, but sure enough, that same weekend, it was announced that Bank of America would be acquiring Merrill Lynch. And of course,
Did they ask for your approval?
no, they didn't consult me, but that was done at a little higher pay grade than me. But
Yeah, but you're the senior vice president for wealth management. That sounds very impressive.
yes, well, I can say in securities firms they do toss around titles a little bit liberally, but I'm happy to have it. I mean, it did take a long time to get there, but I'm very happy to be at Merrill Lynch. It's a great company, and I'm fortunate enough to watch over about $450 million of our clients' assets.
What a nice round number, $450 million.
And
about 10 cents of that is mine, right?
no, a little bit more, as I remember. But it's my privilege to be working with you, that's for sure. But it takes a lot of work. Come in each morning about 6:15.
You're in your office at 6:15?
Yes. No, I don't start answering the phone at 6:15.
I'm often at my computer at 6:15, but I'm in pajamas. So you're dressed like this.
Yes.
And at your desk at 6:15.
Yes. Checking all the previous day work and preparing for the day.
That makes me think of the movie, what was it called, Other People's Money, with Danny DeVito, where he had a name for his computer, and the computer was by his bed, and he woke up with the computer, and he went to bed with the computer.
Yes, well, probably my wife Gretchen would say I'm similar, but it's a lot of responsibility. But I'm happy to be there, and I really enjoy it. And also I get to meet great people like you.
Oh, you say the sweetest things, but you're also conservative, at least the way you handle me,
Yes.
which I like very much because I'm not the kind of person that, although I do like the slot machines at Atlantic City, but there's a limit to how much I will bet, you know, the quarter machines, that's it. But you're conservative in the way you handle people's accounts, and are there times when you have to warn a client and say, that's too risky, I wouldn't want you to put money there?
Oh, sure. I mean, we have to be very aware of capital preservation, and you know, we do significant interviews with the clients and try to figure out their risk tolerance, and we try to match their portfolios with their risk tolerance. And sometimes we have to go over that they have their long-term goals, and maybe being ultra-conservative is not going to get them to where they need to be. So sometimes they have to be a little bit more aggressive than they would like. They have to get out of their comfort zone.
You have to push them a little bit.
Yes, and that's especially true today because, I mean, for virtually my whole career, our clients could buy high-grade bonds, high-grade fixed income investments, and generate the type of income that they needed to meet their expenses or their growth rates. But now we're in an entirely different world. I mean, we have a Fed funds rate of 0 to 1/4%. If you look at your money market funds, you know, they're yielding 0.05%. 10-year Treasury. You lend money to the federal government for 10 years. Right now, they'll pay you 1.9%, and inflation is about 2%. So therefore,
I'm not good at math, but that tells me that you lose out.
Yes.
If you do that.
What it means is that after 10 years, the money that you have, including the interest, is going to buy slightly less than it buys today. So that's not a recipe for a successful investment plan. So we have a totally different environment today than we did when I started. Now, in 1980, long-term Treasury rates were over 14%. So
what a difference!
It's just very, very different today. So an investor at that time could be very safe with their capital and get extraordinarily high rates of return and meet most of their financial objectives. But now it's a very different situation, and investors have to look at alternatives, perhaps high dividend-paying stocks, master limited partnerships, REITs.
I don't know what a master limited partnership is. Would you care to explain what that means?
Well, that's a structure for a company, and typically you find the master limited partnerships with companies like pipeline companies. And so, for example, companies that transport oil and gas from the wells to the refineries or to the utilities. So,
as long as they don't build them in Alaska, I'm happy.
Oh, you don't. Well, how are we going to get all that energy that's up in Alaska? How is that going to come down to the United States?
We're on opposite sides of the fence on a couple of political issues. But I brought in this article from January 2nd from the Inquirer about what it meant to avoid the fiscal cliff. And it's funny, I don't know much about national budgets or national financing. I just knew that neither the Republicans nor the Democrats wanted to be held responsible in the next midterm election for a disaster, which sounds like it was a disaster. And because they finally avoided going over the cliff, that meant that the Bush-era tax cuts were extended.
Yes.
That the estate tax at top rate of 40% on the first $5 million, exempted for individual estates and $10 million for family estates. I don't have to worry about that. I'm not up there.
Maybe one day.
Whoa, it should only happen. And to me, the most important item was that it extended the jobless benefits for a year for people who were on unemployment, who were not having a good time securing another position because everything was kind of depressed, especially in the month of December, you know. The cuts. Now, explain what sequester means and sequestration, because nobody knows what that means and they throw it around a lot.
Right. Well, the new Treasury Secretary elect, Jack Roux. Yes, he's the one that came up with the idea for the sequester, and basically it's a series of draconian spending cuts that are so severe that to let them happen would be intolerable. So therefore it would put significant pressure on the politicians to pass a bill to make sure that doesn't happen. So that's the sequester. So now in this fiscal cliff deal, they just kind of punted on the sequester. They just pushed it ahead. They delayed it for 2 months, and they wanted to deal with the tax side first. But the sequester would call for $2 trillion of spending cuts, $1 trillion on defense, $1 trillion domestic. So to let that go through would be very, very disruptive, and it's very unlikely to go through. But we're going to have another type of debate right around March the 1st when the sequester is scheduled to kick in. And of course, another part that was not considered in the fiscal cliff deal, and just as an aside, the fiscal cliff is probably not the best metaphor, because if you're driving in a car and you go over a cliff, I mean, there's no coming back.
No.
I mean, you're a goner.
That's it.
It's probably fiscal quicksand would be a more appropriate metaphor, because when
Boehner was in the quicksand, right?
Well, he felt a little bit. Yeah, he was in a little bit of a bind, and he just made the best deal that he could because he didn't have a whole lot of leverage.
No.
But everybody knew, even if we went over January 1st, which technically we did, you know, this bill it did not go through until 2013. So we technically did go over the cliff. But if going over, it would just mean that the economy would gradually start to slow down as all the tax increases and the spending cuts went through. But a very important event that is going to happen going forward is the debt ceiling extension, because you have...
Has Congress ever failed to vote an extension or raise the debt ceiling in the past?
No, they've never done it in the past, although it's not to say it hasn't been subject to debate, and there's many, many senators that have voted against the extension of the debt ceiling, including President Obama. When he was a senator, he voted against the extending the debt ceiling. Yes.
I didn't know that.
Yes. So politics is involved, and the Republicans, there's no question, they feel that on the tax increase side, they said, well, we agreed to these tax increases, so that part of it's done. And even in terms of the rates, I think the president and his administration, they're not going to be changing the rates. But that's not to say that they're not going to go after additional revenue, primarily by eliminating certain deductions. And the Republicans absolutely want no part of that. Also,
Well, they figured they lost big because the taxes, you know, went up on the multimillionaires whom they were trying desperately to protect.
yeah, but keep in mind, the payroll taxes went up for everybody. So also deductions for folks at 200 and 250,000, they start to lose out on deductions. So the thinking that the only people that are going to be impacted by the bill that was passed are single folks earning more than 400,000 or married folks earning more than 450.
450.
People that think they're the only ones that are going to be impacted, and it's not quite the case. But the payroll tax cut was never intended to be permanent. It was going to be a 2-year tax holiday, as they say, and we need those payroll tax revenues to fund Medicare and Social Security. So I think that to say that, well, that's a tax increase, it's a little bit of semantics. But I think that in terms of the debt ceiling, the president has said he wants a clean bill. He doesn't want any type of spending cuts associated with an extension of the debt ceiling. And the Speaker of the House, Boehner, he wants at least a dollar's worth of spending cuts for each dollar increase of the debt ceiling. So you have two very, very different positions
Positions
are going to clash. And so we're going to have...
And Boehner, he's not a free agent. He's looking over his shoulder at the new group of the Tea Party Republicans who would rather see the federal government close its doors and let everybody fend for themselves. That seems to be their philosophy. And he's got to somehow cater to them at the same time as he has some reasonable members of his party who say, well, wait a second, we have to compromise. But the Tea Party people seem to think that compromise is a dirty word, which is sad.
Well, I think the folks that are in the Tea Party wing of the party, many of them were elected in 2010, and they were not sent to Washington to raise taxes. They were sent to Washington to get control of the size of the government, which they feel, and their constituents that elected them feels that it's out of control in terms of the growth of...
Except when you see something, devastation like Hurricane Sandy, the whole northeastern seacoast, there is no private company, there's no organization, there's no charity that could ever possibly rebuild the infrastructure and save these people's lives because it's just overwhelming. It was like a tsunami hit the northeast coast of America. You need a federal government in times of disaster. And even Governor Christie, who's really a conservative Republican, even he turned around and realized and welcomed the President of the United States with a hug and open arms. And I think the other Republicans were foolish in criticizing him for doing what he had to do to save his own state.
Well, I think the position of a lot of the Republicans is that they fully understood that Governor Christie should welcome the president, welcome the aid that he would facilitate to bring to the state. A lot of folks feel that maybe he was a little bit overly exuberant, and I think that my comment, this is personal comment, that I understand that the governor would welcome the president. I thought, though, when he threw Mitt Romney, what I would call under the bus, when he was asked a question about Mitt Romney there was a thought that he may want to visit the storm damage, and Governor Christie said, the last thing that I want to do at this time is play presidential politics. If you think I want to play presidential politics right now, you don't know me. As though in the end game of a presidential election, there wasn't a political component to the president going down to New Jersey to visit Governor Christie. I mean, everything
This happened the end of October, right?
Yes. So everything
right before the election.
Everything at that time has some political element to it, and I think it was perfectly appropriate for Governor Christie to welcome the president, but he didn't need to throw his own party's candidate under the bus at the same time.
But we don't know what kind of conversations Christie had behind the scenes with Romney, and maybe Romney said or did something that aggravated Christie, or that would have alienated the help coming from the federal government. Because Romney, you know, I mean, he was pandering to the Tea Party also through his whole campaign and talking about we need less government. I'm a firm believer in having more government. I think there are a lot of problems that only a federal government can solve, like cancer research funding. I mean, there's no charity in America with all the good deeds that they do that can raise the kind of money that the National Cancer Institutes, you'll agree with that, right?
Well, that's certainly a worthwhile cause, and
yeah.
I support American Cancer Society,
right.
And so I know there's millions and millions of dollars that are raised privately, and if the federal government can help out to some extent, I mean, I think we have to consider that. But keep in mind, we have enormous deficits right now. We have $1.1 trillion deficit. We've had a deficit over $1 trillion for 4 consecutive years, and ultimately, it's going to create a debt crisis if it's not addressed. I mean, we are borrowing 40 cents of every dollar that we're spending, and that is just not something that's sustainable over the long run. So we do need to make some choices in terms of where we spend our money, and we're going to have to restrain it, because we've already seen what's happened when the markets rebel against a country because they start to lose faith in their ability to pay their debts. Then these cuts are just imposed on the country, and just like in some of the European countries that ran into difficulty. Now, I'm not suggesting we're like
Greece.
We're like some of the weaker European countries, and we do have an example. For example, Japan, they run enormous deficits, and they're able to fund it. But they have the Japanese are wonderful. They're great savers, so they can finance their deficits internally. They don't need to borrow money from China. They don't need to borrow money from OPEC. They don't need to borrow money from other wealthy countries to finance their deficit. So we do need some of that to finance ours. So I do think it is important that we get our spending and our deficits under control, because even Erskine Bowles, I mean, he's a Democrat and he's no crazy conservative, he says this is the easiest crisis to forecast. And so we had the Bowles-Simpson committee.
Bowles-Simpson.
And so I think let's take a look at that and try to make some choices to get our deficits under control.
You mentioned that Jack Lew had come up with the sequester scenario,
Mm-hmm.
but while you were describing it, it sounded to me like a union employee negotiation. You know, the management puts the toughest scenario, this is all we're going to give you, and then the union comes up with, this is what we want, and they're both like, you would need a magic wand to fulfill either one of those positions,
Mm-hmm.
right? And then you lock them in a room, like the hockey players,
Mm-hmm.
you know, and they did a lot of damage to their whole industry by closing down the sport, right?
Yes.
But eventually they got locked in a room, and somebody said, you can't go out to the bathroom, you can't bring any food in until you come to a settlement. And then they were forced to come to a settlement. I guess that's what happened with the fiscal cliff deal, that the Congress, they didn't like losing their Christmas, New Year's
Mm-hmm.
holiday, and they were locked in, and they finally came up with something, as you said, it was really 2013 because it happened on New Year's Day.
Yes, that's right.
But I kept telling people, the U.S. Congress is so powerful. They can waive any rules. They can make things retroactive. Don't
Yes.
worry about
Yes.
it. And
No.
that's exactly what they did.
Absolutely. That's what I told my clients. I said, for any type, these
Look
contentious...
at that. I could have been a wealth management counselor.
we have a desk for you at Merrill Lynch. These contentious negotiations first, they always go down to the deadline because let's give an example. Let's say that
It's showbiz in a lot of respects.
well, I think I hear a lot of criticism all the time, but basically what you have are two very different ideologies, two very different views of the world, and they each represent their own constituency, which in many cases they're very passionate. So,
especially when they're looking at when they have to be reelected.
But think about this, Bonnie. Let's say that we knew that this fiscal cliff was looming, and there's conventional wisdom that said, well, why do they always go to the deadline? Why didn't they just solve this problem right after the election or before the election?
Or Thanksgiving.
Now, how do you think it would look if John Boehner agreed to these tax increases on November the 15th? How would that look to his constituency? Could he look them in the eye and say, I made the best deal I possibly could? I mean, the criticism would be, well, why didn't you try harder? Why didn't you try to drive a harder bargain? So it was very unlikely.
I felt sorry for Boehner, I have to tell you. I mean, because at one point, he did have a deal. But when he went back to his caucus, they said, forget that. And they wouldn't allow him to do it.
Well, he was going to propose to raise taxes on folks earning over $1 million. But the president already said he wasn't going to support that. Harry Reid said not only was he not going to support it, who knows if it ever would have come to a vote. So the Republican congressmen, they had a choice. Are they going to vote for a tax increase and have it on their record so that their primary opponent, maybe in 2 years, is going to run against them and say he voted for a tax increase that was never going to pass?
Yeah.
At least the folks that voted for the bill that did pass, the Republicans that voted for that bill, at least they knew that it was going to pass and that it was going to avoid the fiscal cliff, which, and as you mentioned, Boehner was in a very tough position because if they didn't have any agreement, this is what was going to happen. There's no agreement, taxes go up for everybody. Then you know the very next day the president would come and he would tell Harry Reid, here, submit this bill to lower taxes for 98% of the people, and his bill would have been $250, I'm sure. It wouldn't have been $400 or
right,
$450.
Exactly.
And then and dare the Republicans to vote against that. Are the Republicans going to vote against that tax decrease? No. So he knew that they would have been in a really tough spot. So he just made the best deal that he could. And also he has much better leverage on the debt ceiling and the sequester.
That's true. He figures, you guys owe me. I bled a lot to get the fiscal cliff deal through.
But it's not just about owing. It's about for example, on the sequester, if they don't have an agreement, all of a sudden these spending cuts come through, then the next day Boehner will craft a bill to reinstate a good chunk of the defense cuts and whatever domestic spending cuts that they want. So he's in the driver's seat. And I think the president and the administration and the Senate are in a little tougher spot. But
do you have, we're running out of time, unfortunately. Do you have any advice for people who were looking at the economy and saying, what should I do? Where should I try to invest?
Mm-hmm.
Or just have them call Pat Walsh?
Well, we'd always like that. But I just say the world that existed for the last 30 years does not exist anymore. The days when you could invest in bonds and have a high rate of return and earn income,
they're gone.
We're just not in that environment. Investors are going to have to look at alternatives. They'll have to look at high dividend paying stocks, pipeline MLPs, REITs. I think that also take a look at the tax situation. Dividends are taxed favorably. In fact, if you're in a 15% bracket or lower, you don't have to pay any taxes on dividends, where you do have to pay taxes on interest. So take a look at your tax situation. Consider things. You're not going to make any money on money markets or short-term CDs. No. So sometimes you may have to get out of your comfort zone.
Out of the comfort zone. Our guest today has been Pat Walsh, Senior Vice President for Wealth Management at Merrill Lynch. And thank you so much, Pat. This has been very interesting.
It's my pleasure, Bonnie.